Good morning. Happy Thanksgiving. Looking at gold this morning, it's not really going anywhere, but because it's such a popular market, I just wanted to have another update. You can see that we are in this triangle pattern. We're getting higher lows and lower highs. So we are moving towards the apex of the triangle. It's this trend line that is dominating at the moment. We can't get through it. That trend line is roughly around 41.75. So far, we appear to be rejecting that trend line. Whether we come down to the lower trend line, I can't be sure, but if we do, it could be a $100 drop. Obviously, if we break above 41.85, that could clear the path for further gains, and 42.40, 42.45 looks like a reasonable target if that happens. For me, this isn't really a market that I can trade. I do have a couple of trade ideas for you. The euro versus the pound has been in a really decent bull trend. You can see that we've come down to a really good support level. 23.6% Fibonacci support at 87.45, 50-day moving average around 87.50. We've got previous price action as well backing up the fact that this should be a good support level. So we're at the lower end of a range which stretches back to 28th of October. Okay, so for the last month, we've just been in this sideways pattern and we're testing the lower parameters of that range plus the previous high up here. Looks like a good support level to me around 87.50. Where would you put your stop loss? I've got a trend line that goes back to here, 14th of August, if you want to put that trend line on your chart. That trend line comes in at around 87.25. So a break below 87.25 and you want to be out of this position. I think that's giving it a wide stop loss actually. Okay, it's only 25 pips. Probably could be 20 pips, but there you go. That 20 to 25 pip stop loss would definitely do the job on this trade. Where could we go on the bounce? Well, the high of yesterday's candle was 88.17. So that is almost 70 pips from where we're trading right now from the support level. So even if you just managed to squeeze 60 or 70 pips out of the trade, that would still be a 2-to-1 risk versus reward ratio. I would be happy with that. One other suggestion for you is the Aussie dollar versus the New Zealand dollar. You can see, again, decent bull run. We've retraced to a good support level. We've broken the trend line, so we would need to get back above 114.40, which isn't a million miles away from where we are now, 25 pips or so. That would be the signal for me that we have bounced off the support level, and the support level is around 114.00. We've again got the 23.6% fib, the 50-day moving average. Price action not quite as clear as the EURGBP, but definitely some peaks up here help to reinforce the fact that that should be a good support level. Again, you can have maybe 20, 30 pip stop loss, nothing too serious. 113.70, break below there, could take us out of the long position. So you're talking 30 pip stop loss for a potential profit of, well, look, 115.00 would be very realistic and not a difficult target to achieve, I would say. So you could be looking at minimum 100 or even 150 pips profit on the trade for a very small risk. Okay, hope that works out for you. We will review it again tomorrow morning. Good luck if you're trading today. Obviously not expecting much volatility with the US on a holiday.